Hello guys, my name is Alex and today we're going to talk about traders psychology, and in my humble opinion traders psychology is one of the fundamental bases of our successful trading. So in order to do great profits, in order to do um, like sustainable results, sustainable profits, sustainable pluses, we need to gain a lot of experience, and first of all we need to gain a lot of psychological experience in this field. So today we're going to talk about one particular psychological moment. Sorry guys, I will do myself a little bit lower. Okay. um, it's called the house money effect. So this affects on traders doing after receiving some very big profit. Yeah. So when we do like have some kind of windfall trades for some short period of time, we don't associate this profits as our real money. So this is some kind of psychological delay that leads for losses actually. And this is one of the greatest psychological mistakes that traders are making on the market. So let's talk about this more precisely. Maybe I will try to. So I do have very small presentation for today. It consists only of 2 slides, but I want to show you some maybe some examples from the real life or some real stories from real life that you can understand this material better. Maybe you will have, or maybe you did have some kind of the same experience in your own trading or not trading actually. So this is like wider psychological moments, not considering about the trading, maybe about gambling something, maybe about how we manage our money in other situations. So what is house money effect is um so just imagine, maybe I want to draw something a little bit. Just imagine that you go down by the street and you found a big case full of money. So it came out of nowhere, and I don't know, have 1 million bucks or something like this. So you just found a lot of cash, and what are you going to do next? So it just suddenly appears in front of you, and you don't really, I don't know, take any effort in order to achieve this result. So it happens like without any of your concern. You just found it, and most of the people, they are going to use this money for some, I don't know, they will buy some goods for themselves or for their relatives, something like this. So they won't associate this money with themselves or with their profit, and so they will spend them very easily. This is the same effect for the families or for the persons who just won like big lottery won, and you know that in a lot of cases these guys, they lose their money because it came out of from nowhere and it go to nowhere in some short period of time. So we're going to talk about the same effect but considering trading, and we do have like smaller terms over here, but the idea is quite the same. So there is some kind of psychological delay between we receive the profit and we understand that this is our money and this is our profit. We process this moment. Okay, so um, just how the person is seeing. Yeah, we do have an eye, and we do have a light. It go inside our eye, then inside our brain. So this is like our brain. Sorry for my bad pictures, but the idea is that there might to be some period of time for us to understand the process that we're just seeing in front of us. And the same idea is here. So we do have some kind of very successful trades, and we need to like to have some psychological delay before we understand that this is our money. This is not somewhere else money. We just don't find them on the street. This is our profits, and we do have this psychological delay. And while we do have this psychological delay, our risk tolerance is getting lower. So in some cases, this will be something like this. So I'm going to create a small chart over here. So just imagine that you do have very successful trading day, and I think a lot of you guys do have this successful day, 1 out of, I don't know, 10 or 2 or 3 or 5 or 50. Nevertheless, you do have one successful day, and so this is the chart of our deposits. So this is our money, our deposit, and this is time. If we do our risk calculations correctly, if we have our risk tolerance clarified and the understanding of the risk is clarified, so our chart, our deposit will be something like this. So it's going up and down slowly, but it does have a trend in order to accumulate our deposit to become greater. But at some point, maybe you will have very successful day, and your profit at this day will be more than average profit. So for instance, you have a $10 profit per day, just in this case, and at some point your strategies like were super profitable at this day, and you've done, I don't know, $50 profit. So what do you need to do? How this money effect will work here? So you just used to have some kind of average profit, or you just have an assumption that I don't know, $10 or $20 is okay for today, and you have 50. So our brain, it needs some period of time to like recalculate this, to understand psychologically that this is our profit. In this case, the brain works like this. So it's like $10 or $20 of our profits, and for example, in this case, I don't know, $30 or $40 of excess profit, something bigger than our average profit. And we can take this money, and there is a very big possibility that we will trade this excess profit with the greater risks. So this is how it works. In this case, the best idea, the best strategy will be to create some kind of limits. So if you are successful, if your trading day is like one of the best day in your career, in this case, the same idea with the losses, the same, you must have some kind of stop losses, what like in this case take profits. You just need to have an understanding in your trading plan that like $50 is like way too good, and you don't need to trade up, because when you are going to trade up, you'll be more like less tolerant, and in this case, in a very like I don't know, 80% of the situations you will eventually lose this profit, or maybe you lose the whole profit, because you will be like less awarded about the risks. Okay, so the biggest tip how to control this house money effect is the understanding of this process. Like this is the first idea. You need to understand this process, you need to understand how it works, and you need to have some kind of triggers that you will understand that you are not trading correctly. Yeah, that you're not psychologically like on 100% clear path. Yeah. So The second idea. The second idea, you need to have some kind of take profits or stop losses if we talk about like losses of the day. So you need to have some borders of your day trading or week trading or session trading. It can be like plus 5% of the deposit, for instance, and minus 3% of the deposit. Why not? If you succeed and do 5% of the deposit, this is it for today. Don't try to push it harder because of this house money effect, this can go, the 5% plus can go into minus 3%. So this is quite the widely spread situation. So in this case, you just need to understand that your profit is your money, and you need to eliminate this process of understanding. Okay, let's go to like another examples. So another definitions of the house money effect. Our previous profits make us to expose our capital to more risk. Yeah, the same idea. So if you do have like a win strike, if you do have a lot of successful trades, it doesn't mean that you will have the same amount of successful trades in a row in the future. Actually, the possibility of this outcome is like very low, and you need to understand this. You cannot make, I don't know, for instance, you do have like 3 trades in a row which are positive. The outcome that the force will be positive too is very low. This percentage, this probability is very low, and the more like winning strikes we're making, or the more profit we're making, this possibility is going to decrease. So in this case, so this works. Our brain is confusing us at this point. So this is another side effect of the house money effect. So when we do have well windfall trades, maybe a lot of small trades, positive trades, or maybe one big trade that gives us a very like enormous profit from one trade, it can temporarily lower our risk tolerance, and we don't need to do this. Talking about like option trading, there is a parlay system, and this is maybe one of the best examples how this works actually. So this earned money in the parlay system, I will explain the system actually in a few minutes. This earned money are not perceived as a real profit. It's like some kind of the process we're doing, but it's not psychologically inside our understanding. So that's why maybe there is like another tips for this house money effect. When we were talking about this borders for the profit and loss for the day, uh, this is like the psychological idea of this border. So when we achieve plus 5% or minus 3%, we stop trading, and we do have our psychological understanding about this process for the end of the day. And when we come back to the other day, we understand that this is our like balance. This is not the part of the process. This is our balance from the previous day, and we think about this money from other point of view. So we have already processed this. But while we're doing this, while we're trading with a parlay system, for example, it's harder to do this. So how does the parlay system works? If maybe you don't know how it works, briefly, it works like this. So I think you know the martingale system. When we double our or use some kind of coefficients to increase our trading amount if our trade was unsuccessful, if it was like negative. This is the same idea, but vice versa. So, for instance, we do have a table, we do have like 3 steps in this example. And our first trade is for, I don't know, $1, and we will increase the money if we will be successful. So vice versa from the martingale system. So if we will be succeed, I don't know, we'll make $1.8 profit from this first trade, and then we will reinvest this partly or maybe full reinvestment. We will take this $1.8 and go to the, I don't know, to the second trade, then take this money and reinvest here. So this is the idea. But as I've told you, the possibility of this, like one, two, three, like 4 trades in a row, like making this 4 trades in a row, the possibility of this event is like going to the zero. It's nearly impossible to trade, I don't know, 10 trades in a row and then another 10 trades in a row with a positive outcome. So this is very, very low probability of this event. So while we're using this, so our risk is only $1, yeah, because we are reinvesting our profit. But when we do this kind of trading, we don't actually think about this profits and the profits. It's just a part of the process of trading, or the method of trading. And this is one of the good examples of house money effect. Yeah, because we can push it too hard, and we can lose this eventually, lose this strike of the, like, winning strike of the trades with one unsuccessful, and we will lose everything. So this is the one of the ideas of the house money effect. Actually, there is one very popular story about this, about the couple that go to the casino in Las Vegas, and so they're in the honeymoon and they lose some kind of money. So they actually don't have more money for do their, like, gambling or whatever they were doing. And the husband is suddenly, so he found $5 $5 coin, and so he went to the casino and he put it on the same number like every time. I think 17 was the number. So from the I want to calculate this actually. So from the first withdrawal, he had like $5. So there was like 35 to 1 outcome, money outcome, and he earned $175. He take this $175 and he use it the same in the same idea. He used the same number 17, and he won again. So he won $6,000. He take this money and use the same idea, the same number, and won again actually. And so he was doing this until he reached some kind of millions, and I don't know, he was extremely lucky, and so he made 7.5 millions from $5. And at some point his luck was gone, so there is inevitably would happen, because he was like putting on the same number again and again, maybe on the different tables or something like this. But the idea is that he eventually lose everything and he just went to zero. But when he come back to his wife, she said, how does it happen? He answers that he just lose $5, and this is quite the idea. And this is actually quite the idea of the parlay system that I've mentioned today. But his attitude for the money was incorrect. Yeah, because if you do have like extremely successful results, you need to take some some, I don't know, maybe partly, maybe 100% of this result, and to keep it, and to, I don't know, go through this, like sleep over this, have this psychological understanding that you do have this process, because he was just rolling in this up until he just lose everything, and this is incorrect behavior, and this is like the typical house money effect. Make it in a more smaller scale, and you will have an idea how it works in trading, the same idea. Yeah, so, and last one, the tips how to preserve your money, um, and how to avoid this psychological mistake. So first of all, if you receive a lot of profit suddenly, and you don't expect this from happening, um, you need to have this in your trading plan actually, and you need to understand what you're going to do. Maybe you need like to keep 50% for yourself, for your deposit or for your like safe deposit, and to use 50% in the trading or the like other investment operations, or like 75% you need to keep, something like this. So just don't blow it up. Okay, so this is the main idea about the house money effect, and how to deal with this. If you do have some kind of similar experience, you can share this in the chart. Maybe we can discuss this. And actually, if you do have some kind of questions, type them down. I'm going to answer this. We do have a delay, maybe 15 seconds or maybe 20 seconds. So please type them down. And sorry, guys. Um, increase the volume. Oh, 1, 2, 3. Sorry, guys. I didn't recognize this. My today earnings $74. Okay, so about the earnings and about the numbers. So please understand that it's very good idea not to use. So I actually I use like $10 or $50 in the explaining of this material, but try to go for the percentages, because it's like more accurate to understand everything in the percentages. It doesn't actually matter what kind of, how big is your deposit or how much do you earn. So this is like $74 from the chart. It can be like 1% of the deposit, or maybe it can be, I don't know, 100% of the deposit. And this is like two different angled cases about risk and money management. So consider your trading and calculate everything in the percentages. This is more accurate to work with. Um, what strategy did you use? Oh, so it's not for me. It's valuable to buy Bitcoin on any platform, including OLYMP Trade, over the weekend or the best time in the week. Actually, you cannot buy like Bitcoins itself on the platform. I think you can deposit in the Bitcoins and withdraw in the Bitcoins. So we don't have yet um, the wallet in the platform when you can buy the Bitcoin, like the spot Bitcoin, the real Bitcoin. I think this will be done in some near future. I don't know when. So this is like long-term process, but guys are working in this area. So if you want to buy Bitcoin, like real Bitcoin, you need to use some kind of other platforms. If you want to trade the Bitcoin difference, so yes, you can do this on the platform. PDF copy of this file. Sorry guys, not for now, but we are working about creating this materials in a PDF files with the designers, and we're working about we work. So we're making like a new educational cabinet. I think this will be in several months. So um, you can download a lot of materials over there, but if you do have some kind of questions, you can ask me right now, or you can just watch a lot of different videos and live streams on the channel. And if I don't know, maybe there is like um, no unanswered questions over there. So if you do have any kind of question about the trading, I'm like almost 100% sure that we have already spoken about this subject before. There is a lot of like sub channels about the strategies, about risk and money management, about psychology issues. So please like search in this channel and you will receive a lot of interesting and useful information. Okay guys, I think this is it for today. Thank you for watching this video. Thank you for being here with me today. Thank you for your questions. See you guys in a 1 week. You can actually, so next week we can, yeah, I will be running the streams on the Wednesday, and we will talking about some kind of trading strategy. So you can join me on Wednesday. Um, okay, so I'm farewelling for now, and I'm wishing you a good holidays. Think about risk and money management, and don't become a victim of the house money effect problem. Okay, have a good trades, have a good weekend. Bye bye.